Hello, guys. Welcome to the podcast. I'm here with Paul and Remy. Paul Heysch, Remy Kim. And, kind of a timely topic right now, given all everyone wants to talk about is Chapter 11 regulations and all sorts of different kind of laws. We're doing a kind of podcast focused on crypto regulation, etc. And so I know you guys have been looking at it for a long time, and can't wait to tell us about the Howey test and all sorts of obscure laws written 100 years ago before the internet even existed. But I think maybe to kind of start off, I guess, what's like on the top of everyone's mind is like, this whole FTX situation, right? So, I guess, why don't you guys talk about the regulation discussion that was happening before the FTX whole thing happened, where we're headed, what we're talking about, and then how that has changed given our best friend, Mr. SBF.
Yeah, so sure. I guess before the entire fiasco that happened around FTX, in terms of regulation specifically, we were looking really at two main areas that people were tracking. So first, ongoing kind of litigation from the SEC mainly, and that's against it could be against specific tokens or specific companies, we've seen with Coinbase, Ripple, all of that. And that's kind of more the aspect of regulation by enforcement, which has been kind of criticized in the past because people will criticize the SEC for being unclear and then attacking specific actors based on very unclear wording. So that's been one area of focus. People following very specific lawsuits to try and figure out what precedents are going to be set.
Just really quickly, SEC enforcement, regulation by enforcement.
Right.
That means you're taking them to court.
Yeah, so it refers to a type of regulation, so it would be as opposed to regulation by legislation, right? Mm-hmm. And so regulation by enforcement would be periodically the SEC will basically sue somebody that they deem to be in breach of a very vague set, for example, the Howey test for what is a security. They'll sue a specific token and say that token is a security, and that's kind of how, and then that'll set a precedent, and then going forward, that's what everything will be based on. So that's the first area of that we've been following, and the second area is more the legislation, which is what happens in Congress and not really with the specific regulators. So there, Remy can go into depth about that, but there's two kind of main bills that are in the pipeline.
Yeah, so even before the FTX, the fiasco thing, we've been having two main bills mostly talked about in Congress. The first one is the Loomis Gillibrand, and the second one is the DCCPA, which was partially backed by SBF, largely known as. So, and we'll be talking about differences between these bills later on, but I guess and DCCPA has been on the table since June, but it has kind of gained momentum over the last 1 or 2 months with SBF I guess said to be lobbying a lot of Congress people in the Congress and DCs. So yeah, and then with the and also I don't know if you guys seen the debate between Eric Voorhees and SBF that was also around that specific bill and how SBF kind of thought how DCCP could actually save crypto in some sense or not. So and then the FTX came, right? So a lot of people kind of posit that DCCPA might not may have lost its momentum or something, but from my perspective, I think it's still going. There has been a lot of talks from people in Congress stating that DCCPA is still ongoing and they're still working on the final drafts. The leaked version, we're not sure if it's really the current version or not, so we'll see how it goes. So yeah, so DCCPA we're not sure. Loomis Gillibrand, it's also on the table, and there are certain vagueness within these bills, which we'll be talking about later on.
Okay. When we're talking about these bills are on the table, etc. So the midterms just passed, right? So does that mean we might see some action here within the next 2 years? Is that the expectation? One of these will pass?
Within the next 2 years, we would definitely think so.
one of these bills is going to.
So it's there. It's not very. It's not really necessarily exclusive.
Okay.
Yeah, and so we would expect probably 2023. Like earlier this year, there was some like legislators saying that they could see things passing this year, but that was more wishful thinking than anything. Most realistically, it's probably like 2023.
Okay.
Yeah.
And what will we see first? Like, what is the impact to us as people who interact with applications on chain, or even with Coinbase, or not FTX anymore, or like Binance or whatever?
Well, so I think the FTX event like definitely brought us like more spotlight into how exchanges work, right? And how like liquidity must be reserved to a certain level and stuff, just as how like banks are required to do so. So I think that would be definitely like the first step,
Really?
like around regulation. And also like it's not in those two bills, but like there's also another bill called DCEA, abbreviation for Digital Commodity Exchange Act, which was specifically talking mainly about these exchanges and how they should be put under regulation and certain rules. So I think that's actually coming to service more often these days around like media and also like around these politicians. So I think that will be like a first step, like because like I think that's in some sense like a basic interface for retail users to getting into and like interacting with the crypto space. So that will happen, and then probably somewhere around like there's going to be a lot of revisions throughout DCCPA or the Loomis Gillibrand. And I think that's gonna deal more with a more broad sense of what cryptocurrencies are, like what different types of cryptocurrencies are. Although, like if you look into it, they still build upon these like vague definition of what's a jurisdiction. So there's like these notions such as for example, it says like CFTC can deal with all these digital assets excluded. But some are excluded, such as securities, right? And then like then the question arises like what's a security, right? So I think these bills don't still like resolve the idea of whether like certain digital assets are commodities or they're securities, and I think in that those are going to be mainly resolved over the course, just as Paul mentioned, around these litigations and like these court cases. I think kind of dealing with individual cases.
Okay. We're talking about court. What kind of court are we talking about? Like, could we see like a crypto case arrive in the Supreme Court? Is like the future?
I mean, that's an interesting question. I think that is definitely possible. So far, it's been like the lower courts. Like there is a lot of like famous cases between the ones that have already been resolved and the ones that are still in progress that have been in like New York State, for example. But Supreme Court, I mean, why not? Yeah.
I think maybe before this FTX thing, when everyone was talking about crypto, I feel like a much higher probability. Now maybe not. I feel like a lot of people before the FTX thing said like the first thing that's coming is stablecoin regulation. Specifically, like probably the most talked about short is Tether, right? And so is that still like kind of expected to be like come alongside the centralized exchange regulation? Like,
well, okay, so I think there's like 4 bills that we'll be talking about, like Loomis Gillibrand, the first one. The second one is DCCPA, like which was mainly relevant to SBF and his backing. And then there's a DCEA, which I talked about, and there's this 4th one, mainly around stablecoin regulations, which was started by Senator Waters and McHenry, and I think it's highly possible that this McHenry guy, he's gonna be in the head of like one of these financial committees in Senate, and he actually put like cryptocurrency and also stablecoin regulations as his priorities. So I think that's also gonna like pop in over the course of like 3 months or at least two in the next year.
Soon.
And I've heard that like Circle is also working very closely with them to kind of work around how Circle's and like how dollars is actually going to be like interfaced on chain.
Got it. So kind of like the first 2 regulations that we have to look forward to, right? Like centralized exchanges and stable coins. These probably seem all pretty positive to the average crypto user, right? Like if Tether is if I know Tether is 1-to-1 backed because it's regulated, like that is good news for me, right? And the same for centralized exchanges. Okay. And then so like those are like maybe more certain things, right? And then maybe we get into more kind of like A, it's debatable whether or not the regulation is good or bad, and then B, we don't know what the regulation will look like, right? I guess like my understanding is like the biggest question is whether or not Bitcoin, ETH, any other token will be classified as a commodity or a security. Is that like kind of like the big question in regulation right now? Would you say that's fair?
So it seems like, and I mean, Remy, let me know if you have like any different views on this. For the big ones like Bitcoin, ETH, kind of the big layer 1 tokens, those under the current bills that are in the pipeline would be classified as a commodity under the jurisdiction of the CFTC. But then when you look at, other tokens that are kind of smaller, have different purposes, that's where, it's much more unclear. But again, the larger ones, it seems like would be considered a commodity for now.
That's under Loomis Gilbrand as well as the
DCEA, yep.
DCEA.
Yep. Mm-hmm.
What's the one that SBF backed?
Oh, DCCPA. Sorry, so DCCPA. Yep.
DCCPA. So both of these are classifying like the big tokens as commodities.
Right.
Then when we're saying smaller ones are securities, how small are we talking? Are we saying Solana? Are we saying Uniswap? Or are we saying something super small like? I don't want to like Akash or Filecoin or.
I guess like what Paul was trying to say was like not in the sense of like the size of the blockchain itself or the ecosystem, but more as like I guess are they more of a DAO token? Like are they kind of operating as something similar to an enterprise or something, as opposed to like being a means of infrastructure for Bitcoin or Ethereum, right?
So most infrastructure level coins will be classified as a commodity. And then like app chain stuff, maybe a bit more of a question, like gaming. Okay, DAOs are maybe leaning more security.
But like I guess for L2 tokens, for example, and like I think they're still like under investigation. I think they haven't kind of really released some kind of a firm voice, like either SEC or. But like we also have seen the case, like the recent case with LBRY library with the SEC. The court actually ruled in favor of SEC, but I think like these court litigation and their results kind of they tend to flip now and then. So we'll have to see.
Yeah, I think that kind of the two issues are, first of all, that like when you talk about like Bitcoin and Ethereum and all of that, they've been around for so long that they're like really big, and so in any case they would be kind of like almost like I don't know, like grandfathered in or something. Like they would just be like considered all right. Whereas like if you have something new, then it's like almost seen like more strictly by the regulators because it doesn't already have that traction behind it. And then the second thing is like when you look at like tokens that are like you mentioned like gaming, whatever, it can be anything to do with like markets. The regulators themselves haven't been clear at all, mainly because like they don't know the industry. So that's why our responses themselves are so unclear, because it's like even the texts that are out there are giving like purposefully unclear blanket statements because they just don't know how to deal with this.
Got it. I guess like is the general sense that it's better for a currency or whatever to be classified as a commodity versus a security? What is the practical difference to a user if something is classified as a commodity versus security?
I mean, on the user, I guess first of all, like for the creator of the token themselves and like that side of it, the CFTC I believe is seen as more of a lenient regulator, or I guess there's less hoops you need to jump through versus the SEC where you have to do all sorts of security filings, all of that. So that's the first thing. And then the second thing is, I guess from the user perspective, I would say that if it's a security, there's more kind of KYC, AML, probably, and then it's you would be, as the investor itself. In that case, that also comes with probably like more protection, since the maker of that token is more heavily regulated.
Yeah, so I think like two main axes here. Like one axis would be around like who would be whose jurisdiction will we be under, right? SEC versus CFTC, and I think Paul just touched upon this, but like SEC, I think they're most focused around like measuring returns and kind of like imposing certain law by enforcements around. Whereas like CFTC, I mean they also do a lot of like enforcement stuff, but I think their main purpose of of their work is mainly around like market stability and also like finding the efficient like price discoveries and stuff. So I think in that sense, like we're gonna see a lot of drastic changes in terms of regulation perspectives. And the second point would be around like how do these like financial products actually kind of behave? And and also just have like Paul mentioned, I think a lot of regulators are not really touching upon this, like how do for example DYDX token differ from like Ethereum, and like what options, like what can we do with these each of these tokens, right? And I think like FTX kind of rang a alarm to the regulators around like okay, we need to look into like how these different tokens like behave. For example, like FTT, like their prop token of FTX was actually in the middle of all this, because that's how it all started, right? Because CZ was and all that. So I think that's gonna spark another kind of investigation onto these different like tokens, how they behave. And like in the end, also that was also like our conclusion of our report, going through that. In the end, like we're gonna have to also investigate how LPs like liquidity tokens behave, how staking derivatives also behave, because they're gonna behave like they're totally different from like normal traditional derivatives, such as like options and stuff. So I think that's a definitely interesting area too.
So we might see like 20 or so different categories for different coins and tokens, and each of them are classified differently and regulated slightly differently. Like that might be the future of
yeah, from my perspective, yes, but not in like at least not in the next 2 years. But I hope that happens. So.
Yeah, I see that kind of almost as like a better scenario, because the way that it's heading towards right now is more kind of like blanket regulation, again, because they don't really understand it. But that would be kind of an issue, because again, as Remy mentioned, like the difference between like something that's like strictly, let's say, like a voting token or like a staking derivative is huge. Like the uses that you have for it, the way people advertise it, the returns they get out of it. So it does need to be considered differently. So hopefully there's some kind of iteration in how that's done.
Makes sense. We seem to talk a lot about DYDX today, but one of their recent controversies was like them requiring, was it like a facial recognition photo? Anyone know? Like, was this I'm pretty sure there's this thing where they were doing a liveness check or something, and they were offering basically some amount of trading power in return for it. But I guess just generally, when we're talking about like KYC kind of requirements in our DeFi products, right? Like I think unfortunately, like this is a main attraction for DeFi, is like we can do all these things without having to KYC in any way, whatever, right? Obviously won't name names, but like there are lots of people that use DeFi just to avoid taxes, etc., right? So like when we're talking about like kind of the future of DeFi, is that kind of something we see, like KYC will be required across these applications?
Yeah, definitely. I think personally, I think so, because when you look at the texts, for example, in the DCCPA, it's really hinting towards the fact that like even DeFi protocols will begin to be regulated in a way that's very similar to like a TradFi or company or a centralized exchange today. So what that would imply is that even something that's in its organization pretty decentralized will have to like interact with the regulators and provide KYC and all the kind of following all the AML rules to the same extent that a company like Coinbase today would. And so and if not, then they'll be like fully banned from the US kind of,
hosting or like running on US.
Even further than today DYDX, you can't technically trade it. It could go even further than that. It could be like, for example, the front end, like can't be hosted in the US. So in that case, that would mean that if I want to swap on Uniswap, there's a future where I would need to KYC for that.
Got it. And so some people have gotten around front-end bans by kind of just like sending money directly to a smart contract, etc. Would that still be, is that a loophole that would eventually be closed? Is that even possible to be closed, stuff like that?
So I think you're touching upon a very important point, because like like enforcing upon like these front ends of these DeFi protocols don't really like fundamentally solve the problem unless like for example government kind of enforces Circle so that the Circle contract doesn't go to these blacklisted addresses or something, right? So I think that's like on the back end, like on the infrastructure side of the blockchain, and enforcing those kind of things that can still happen, and like maybe, but like we can't block people interacting with these smart contracts, right? So I think in that sense, like these regulating these certain centralized entities that are operating on chain, I think that's like the farthest that we can go. But like honestly, I'm not sure if that's also like it's a high probable future. I think like a more plausible future would be like something around the front ends, but I'm not sure if that's like what the crypto community actually would welcome. I think I think it was very evident from the debate between like Eric Voorhees and SBF, because like Eric, I think he's an OB in this space, and he's been stating that like regulating these front ends and kind of blocking the interface of these DeFi protocols at least from the US customer, I think kind of kills DeFi's ethos and like the DeFi industry overall. So in that sense, it's a very
it's a problem.
It's definitely a problem, but
probably coming nonetheless.
Well, I think that was like part of what DCCPA was kind of gearing towards, and I think that's we still have to figure out, but that's what many of the OBs in the space have been kind of pointing towards. That SBF was kind of trying to kill DeFi protocol so that he could make his empire of his own.
Sorry, I might be a little uninitiated. What does OB stand for?
Oh, old boys, like
old boy.
Yeah, like the one who's been playing around this space. Like
okay.
OG. Yeah. Oh, yeah. Oh, sorry. OG. Sorry. Yeah. Okay. I guess I meant OG, but anyways.
Yeah. No. I mean, just to add on to that, like, I do feel like it's actually quite realistic that like on the infrastructure end, like for example, if you look at like the block, like people who like bundle blocks, like censoring specific transactions that interact with a specific smart contract, like with Tornado Cash. Like I wouldn't even be surprised if in the future you have like Flashbots or whatever, these big groups that create like on Ethereum specifically that create transactions following like the OFAC list, following these lists submitted by a bunch of regulators, so that they can continue to operate whatever other entities they have. And so you pretty much end up with a world where like
the US government has pretty
like
control.
a vast majority of all the transactions on Ethereum, for example, follow this list of censored blocks. And then, I mean, beyond that, I'm sure there's always going to be ways to get past it. But yeah.
Got it. Okay, really interesting. All right, kind of like an ending exercise. Can we say within like the next 6 months, what regulation might we see? With what % probability might we see that regulation? And then is that good or bad? Or like how does that affect the average user? So like within 6 months, what might we see?
You want to go first?
Yeah, I mean, six months, we would be in like May or something, right?
Right.
Honestly, I would be very surprised if something very big came out. So if FTX hadn't happened, I would have said we could see like a smaller bill, like parts of DCCPA or something about stable coins maybe. Especially because after Luna, like the focus on stable coins, right? But I think after this, my personal opinion is that this has like thrown
whole wrench into
exactly, a lot more than maybe what we would expect. And this isn't just because of the fact that it happened, but specifically because it happened to SBF and the fact that he went to Washington so much, right? And he was like working on this DCCPA, like always, like whether it was like his proposal about the like futures like trading, or just like lobbying, his going on in hearings, donating billions to the political parties. I think that is like actually going to make them very confused, because on the one hand they're gonna need to like be more strict after this, right? But on the other hand, like SBF was the one who was saying that they needed to be and be more strict,
and now he's kind of villainized.
And like in addition to that, like they'll probably not be too keen on being super like harsh on him and FTX specifically, just because he's been such a big donor, right? So that kind of, I feel like, is going to put this whole space into a limbo.
So 6 months, no regulation.
I'd be surprised.
What percent?
I mean, maybe like 10-15% that we see anything.
Okay, so 85% chance we see nothing.
Yeah.
Okay. All right. What's the next time frame then? A year?
Well, I'm not sure, because I think it was one good ending question, because I think differently from Paul.
Oh, okay.
Like on that last question, I think we agree mostly upon like other stuff, but I think this kind of will accelerate like the regulation landscape around crypto stuff, especially around like stablecoin and also like the DCEA, like the exchanges. I think, and also I think this is stemming from the fact that like most of these bills have been kind of having their own momentum, regardless of SPF like lobbying or like going to the DCs and kind of pushing it forward. Especially that was around DCCPA, but like Loomis Gillibrand or like or other like stable coins, we do have like strong like legislative figures who are kind of pushing that through. So I think in that sense it's going to happen, especially with the midterms. I think there's going to be a lot of some progress around like regulations. And who knows, like it might get passed. Well, not so sure because of the divided Congress, but we'll see.
So 6 months.
I think we're going to see at
centralized
least
exchange and stablecoin regulation.
At least those two, I think. Yeah.
Percent.
I'd say like 70.
Okay. All right. How about, I guess, like next time frame then, 2 years. I assume both of you would say by 2 years we're seeing stablecoin and centralized exchange regulation, right? What else might we see? Would we see a blanket, all cryptos are commodities or securities? Is that something that...
Yeah, probably something that goes further into the distinctions between these types of tokens.
Okay. Yeah. Will we see KYC, AML on DeFi?
2 years? I wouldn't be surprised if there was... I mean, there will be more than there is right now.
What does more mean? But I feel like it's kind of one or
yeah,
zero.
Because right now...
Thing, right?
I mean, not necessarily, because right now it's like centralized exchange, right? Like your on-ramp. Your on-ramp is the only place where you like have it.
KYC.
Yeah. So I think like the major kind of, like for example, like DYDX, like, but that's also kind of different because DYDX has been like steering themselves in that direction more. But I think like the major decentralized exchanges, I think will be regulated. So it's not like all of DeFi, right? But like the big decentralized exchanges
will be forced.
Yeah.
To.
Yeah.
Okay.
Yeah, I think I agree mostly around that.
In 2 years, 75 maybe.
Okay.
And like one thing to add would be that just like I've said, like most of the definitions that these like bills build upon, I think they're still very vague, and we're gonna have to refer a lot to these results from the courts and kind of decide case by case. And then after those, based on those, maybe some new bills that specify like which tokens and whatnot should be regulated or not. I think that's going to happen like over time, but I think that's out of the 2 year scope.
Okay.
That's it.
What is like the best case scenario? Sorry, last question. What is the best case scenario for regulation? So we have like kind of individual like kind of listings and regulations for each type of token. If it's a DeFi token, a DAO token, all sorts, if an exchange token, right? All sorts of stuff. Is there anything else that like ideally probably we don't see OFAC kind of like sanctioning or like kind of like control over flash bots, etc.?
I mean, I think this is a really hard question because it's like, first of all, you have to decide best case for who, right?
Right.
There's a lot of different...
Fair enough.
If it's best case for like the, you know, whoever like might be listening on Twitter, like the very people who are like very into crypto, they know what they're doing already. They don't want to deal with too much, you know. Or is it the best case for the builders, the people who are like making these protocols? Is it the best case for the average person who hears about crypto from a Super Bowl ad? It's very different. If it's like for the very average person in America and Europe, it's
more
probably
regulation is better.
Yeah.
And then for a builder,
and then in terms of the builder, the philosophy behind DeFi, like the reason why crypto was, you know, why everything started like a lot after the financial crisis. There's probably more like some elements of the DCCPA, but something that fits the philosophy better, I would say.
Got it. And then for like a little tour regen like me,
I mean, that would be like going back in time, probably.
Yeah, I think I agree mostly on what Paul says. Yeah, it would heavily depend like who we're talking about, and like in terms of like for example like the those who were heavily damaged with FTX and like incident, maybe some more KYC AML stuff might work out. Yeah, from like the U.S. government overall, like or the U.S. economy, maybe some regulations or like KYC stuff might also really help. And one thing like now that you mentioned like OFAC this podcast today, I think like those kind of incidents where government strictly kind of intervenes in one of those smart contracts or like these protocols, I think it's rarely going to happen in the future, because I think OFAC was a very like a special case, right? Obviously, because like there were certain claims and evidence that like some certain like organizations were using OFAC to kind of
Tornado Cash.
Tornado. Oh, sorry. Yeah, I mean Tornado Cash to kind of do their money laundering and stuff. So, but unless like outside of those kind of really strict stuff, I don't think like government's going to be controlling most of the back end stuff. Maybe the front end stuff, but like the best case definitely would be like that. There's no regulation around. Yep.
Got it. Okay. I mean, like this is something I do like maybe unpopular to say, but I agree on SBF. He recently tweeted like a regulator's job is really fucking hard, right? And I think that's definitely the case. Anyways, thank you guys for talking to me. Really informative, really good talk. Yeah, you guys can follow them on Twitter, and that's it for us.
Thank you.